Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's webinar on the topic of key consideration in audit of education sector. As you all are aware that we have AASB has covered all the sectors, and today this sector is very important. That is why we have chosen this education sector. And today is our 152nd CP program organized by AASB of ICI. Honorable Chairman and Honorable Vice Chairman, sir, both are stuck up in one of the another meeting. So that is why I'm taking this liberty to start today's webinar. So before we formally start, we are having with us today's learned speaker, C. Asta Gupta ji. On behalf of AASB of ICI, I extend my heartiest welcome to you, ma'am. Welcome to you this AASB webinar. We are having with us two learned members, very respected members from our Chartered Accountant fraternity. Both are moderators of today's webinar, CA Ashok Jagyasi ji and CA Meenal Khemka madam. I welcome both the moderators in today's webinar. Welcome to you, Meenal ma'am. Welcome to you, Ashok sir.
Thank you.
So let us start today's webinar, and I invite Ashok sir to please start the proceedings of today's webinar. Over to you, Ashok ji, please.
Thank you, Anil ji. Good afternoon, ladies and gentlemen. Welcome you all for joining online webinar number 152 organized by AASB on key consideration in audit of education sector. It's my pleasure and honor to be the moderator for this program. Thank you, Sanjeev Singhal ji and Vishal ji in absentia for giving me this opportunity today. Now I will request my co-moderator, Ms. Meenal Khemka, to briefly introduce our guest speaker, Ms. Asta Gupta. Over to you, Meenal ji.
Thank you, sir. Hello, everyone. Let's have some brief introduction of our speaker, CA Asta Gupta ji. CA Asta Gupta ji qualified in 2016. Currently, she is working as a partner at SK Gulati and Associates since last 3 years. She have range of experience in the field of statutory audit, personal and corporate taxation, income tax assessment, GST compliances, assessment and advisory. She also worked as a senior consultant at Ernst and Young India with risk advisory team conducting internal audit and risk assessment project catering to telecom sector. She was also deputing in Philippines for an engagement during her work stint, and she also worked at audit executive with an in-house global internal audit team of French IT MNC. She also invited as a guest speaker at numerous sessions organized by the Auditing and Assurance Standard Board of Institute of Chartered Accountancy of India to deliberate to own standard on auditing. She also addressed more than 2,500 chartered accountants through both offline and online mode. Convicted technical session organized by the Accounting Standard Board of ICAI on Ind AS. She invited as a guest speaker by the Delhi Board of School Education for counseling students on Chartered Accountancy course as a career. She is also a member of the organizing committee and joint editor at the Bharatiya Vittaya Salaka Samiti, a leading think tank on Indian finance professional, moderator as well as deliberated on technical topic related to GST, international taxation, wealth management and auditing. She is joint treasurer Delhi of Laghu Udyog Bharati, which is an all India organization working for the benefit of micro and small enterprises. She is a member of editor advisory panel of Company Secretary, the official monthly journal of the Institute of Company Secretary of India. She is adjourned allocation competition of CA students organized by the Northern Indian Regional Council of ICAI. She won technical paper presentation across the country in the national conference for CA students organized by the Board of Study ICAI during her student days. Now I request to CA Astha ji to start her session on the key consideration in audit of education sector.
Thank you so much, Meenal ji. Good afternoon, everyone. I'm CA Asta Gupta. I'm a Delhi-based chartered accountant currently in practice. I would like to convey my gratitude to the Auditing and Assurance Standard Boards of India for giving me this opportunity to address our fraternity on such an important topic. I would also like to thank Ashok Jagyasi sir and Minal Khemka ma'am for such a smooth introduction and kickstarting today's webinar. Just allow me a moment to share my deck. I hope the deck is visible to everyone.
Yeah, Asta.
Great. So, today's topic is key consideration in audit of education sector. Before we begin today's topic, needless to say that education is a very important factor. It's a fundamental right of all the citizens of the country. And the education system, it caters to the progress and development of a nation as a whole. The fundamental of the education system are the schools, institutes, and colleges, which offer education to the students, and they basically prepare the future generations to be ready to contribute towards nation building in the future. Hence, it becomes very important that if you look at the education system from finance perspective, it becomes very important to understand that what are the financial reporting requirements, what all kind of books of accounts need to be maintained, what is the basic accounting that these schools follow, and of course, the audit. After all, we as chartered accountants can be engaged as professionals at different levels in this education system, be it as a part of the trustees or part of the board which manages the school, or a part of the managing committee, or part of the finance and account function of an education organization like a school, university, or college. Or we can also be on the other side where we audit these accounts, or we could be hired as an independent consultant to give consultancy on various statutes and application of accounting and auditing. So that is why it is of vital importance that we need to understand what kind of accounting and auditing goes into the education sector. I would like to take this moment to congratulate the AASB for organizing such insightful sessions, not only catering to the standards of auditing, but also making it sector-wise, so that all the professionals that are already associated with this sector or professionals which wish to engage, work related to this sector can gather knowledge and start with their work. So without any further ado, let's begin our today's webinar. So first, I would like to introduce you to the basic processes that exist in an education organization, starting, for example, like a school, so that we understand what are the further financial implications of those processes. So first process flow that we'll be looking at is student admission. So whenever a student gets admitted to the school, that is the point when this process starts. Next is the upgradation. Upgradation means like promotion, when a student gets promoted to next class. And this is how he reaches from class, maybe nursery to class 12th. Suspension or graduation. This is when the student exits the school system. It could be naturally when you clear your high school to class 12, you leave the school, or on some reason or the other, on some faulty ground, if the student is suspended. Another aspect that can be considered here is transfer. When you change your school, or maybe sometimes within city also, like from a KV to another Kendra Vidyalaya, this kind of transfer takes place. So that will also be covered under this particular aspect of process flow. And lastly, we have the alumni, which is basically once you pass out from the school, you must have heard about different alumni associations wherein they invite older students. So if you are a part of that, so that also becomes a part of this process and contributes to the finance of an education system. Now let's understand the financial implications. So whenever a student takes admission, one form of fees that we take from the student is called a security deposit or a caution money. This has implication both on the balance sheet and the profit and loss side, and I will take it up in the future slides. Then we have levy of various types of fees as per the fees chart. So obviously, when a student joins a particular class, it could be starting from the class nursery itself, and when you join in the middle of the tenure. For example, somebody joins the school at class 4 or class 5. So depending upon which class has the person joined And sometimes there are other factors also. So basically, there's a grid which gives the fee structure, and this is how it impacts the finance of the school. Next, we have the student fee matrix, which is grade-wise and student-wise. So basically, this is an extension of point two only, wherein a matrix or a chart is shared with the parents of the student to understand what kind of fee will be charged and how it will be increased over the years. Also, fee increment also plays a very important role here. Then we have collection, dues, penalty, fines levied from time to time. So sometimes, to give a very small example, when you issue any book from a library and deposit the book late, so that results in a small fine. Sometimes maybe some notorious student causes damage to the property of the school. That also gets, it results into a penalty or a fine. Then sometimes there is some certain event. So all these activities can be covered under this particular head of collection dues, and this can be taken into consideration while the student is in the school system, right from the the basically from wherever they are present in the school. Then promotion of school may involve change of fee structure. So again, once you get promoted from one class to the other class, now depending, sometimes some schools are divided into three parts. We have a primary school, there's a middle school, and a high school. So whatever facilities you're providing to the student, like these days, smart classes are very in, and there's a laboratory cost that gets incurred, right? So depending on that, the fee structure also varies. So that also contributes towards the change in the change in the fee structure, and hence the direct impact on the financial statements of the school. And this is covered under the upgradation process. Next, we have clearance of all dues by the student. Now, this becomes a very important aspect to ensure that all the revenue has been accounted for. And this needs to be taken care of at the time. There can be two instances that I can think of, rather three. First, that maybe the student is about to change his school within the schooling period itself. Like, for example, the student is in class 5 and he wants to change his school. So then, because he's going to exit the school system, so there should be a finance system in place to ensure that all the dues, right from the fees, the collection dues, etc., they have been collected from the students and nothing is pending. Similar kind of check needs to be performed when if the school, like in exceptional circumstances, I'm sure, the student is suspended from the school, right? And the third instance is, of course, when the student graduates, like once the class 12th is over and the student moves from school to college. At that point of time, this kind of aspect becomes very important to ensure there is complete financial reporting, and this has been taken into consideration while accounting. Last is the refund of security deposit and caution money. So if you look at this point, it is related to the first point only. So when the student enters the school education system, the school management basically takes a security deposit, which is called a caution money, and it is refundable in nature only when the student exits the school system. So that accounting and that record also needs to be maintained properly, because you need to maintain it for a minimum 12 years if the student has been in the system from class 1 to class 12. So if that accounting is not properly done, so obviously it will result in a flawed financial reporting. So these are the some financial implications of the process flow related to student admission and exit. Next in the process, we have hiring. So the first step in this process flow is regarding staff recruitment. So herein, what I can think of is that the school basically hires a recruitment agency which provides them with the teaching or non-teaching staff and whatever requirement that they have. So that is where the cost is incurred to onboard a hiring agency. Now this recruitment team can also be in-house. I'm not saying it has to be outsourced only, but again, similar costs will be incurred here as well. Next step we have is hiring. Once the recruitment agency has been shortlisted, or once you have made your own team, like there's already an in-house team that caters to the hiring problems of the school. So now the hiring process takes place, wherein you reach out to potential candidates, there is interviews, and obviously, given the volume of teachers and the non-teaching staff, you need to have some people in substitute, because the position cannot be empty, as it affects the education directly. So hiring is also a very important process, wherein this ensures that the teaching and non-teaching staff is readily available at the school at all times. Then maintenance. Maintenance means once the hiring of the staff is done, how do you maintain them? How do you define the CTC, the cost to the company structure? What all components will be there? And what will be the onboarding process? And what kind of training that you need to provide them so that they are in line with the management, in line with the policy of the management as to how to carry out the school activities and how to cater to the students. Because everything has a direct impact on the reputation of the school, so everything goes into maintenance. This also includes promotion, change in grade. Sometimes some teachers, they become, they complete some of their degrees or certificate courses during the course of the school. So how to promote them if they need to be shifted from a junior class to a senior class. So all this is covered under maintenance. Promotion I've already covered here. That when the teacher is promoted from one grade to the other grade. Sometimes a TGD becomes like a PGT. So that's sort of an arrangement. And last is retirement. In retirement, not again, there can be 2-3 aspects. One is that maybe the teacher has left the school because of better career opportunities, or maybe she has to shift, or he has to leave the city. So that kind of scenario will also be covered under this part of the process flow, which is retirement. Now, retirement, as the name suggests, that once there's a certain age limit. Now, if it's a government school, then the government rules will apply. If it is a private school, then again, whatever the policy of the school is defined. At a certain age, when a teacher is required to leave the organization. So what all financial implications can we think of? That could be something in the form of a gratuity or a pension. So all these also have financial impact. So now let's go through some financial aspects that can impact this process flow regarding hiring. So first, there is advertisement and recruitment agency expenses. So as I discussed at the time when I had spoken about the staff recruitment part of this process flow. So before even you hire an agency, you need to give an advertisement as to, we are looking or we are seeking help of certain agencies who can be onboarded to help us in the hiring process. So that becomes an additional cost element, which will have impact on the financial statements. Then obviously the recruitment agency expenses, there could be a certain fee that you could be paying them on retainment basis, or they could be a percentage of the salary if that kind of arrangement is there. Whatever are the contractual terms between the school and the recruitment agency, this has a direct impact on the finances and can also be taken into audit consideration. Next, staff induction and continuous training. So this becomes part of the hiring aspect of this process flow. So staff induction, that once you have shortlisted the candidates, the interview process has been taken place, then you take them on board and you provide them training as per the whatever policy and whatever procedures have been defined at the management level, so that they are in line with the vision of the school and they are able to train the kids and whatever activities that have to be carried out at the school level. So this becomes part of this hiring aspect. And again, this also incurs cost in the form of sometimes you have an in-house training cell, sometimes you need to hire trainers to give specialized training. Then you need facilities that to be provided to be the teachers so that they become experts in whatever task they're hired for. So all this cost becomes part of the financials. Next, of course, the salaries, allowances, perquisites, and deduction as per the staff service rules. So this comes under the maintenance part, that whatever CTC you have defined for the teachers and what all components are there. And there's a payroll team which looks after that. So all these aspects, then the salary aspect also comes into play, whether you talk about the Income Tax Act or the payment of gratuity, payment of bonus. And if there's any other state act which is applicable, that also needs to be considered while we're talking of this maintenance process flow. Then the statutory compliances, like I said before, we have the income tax on salaries, the provident fund, ESIC, the Employee State Insurance Corporation, gratuity, etc. All these compliances also become important from the maintenance part, and they need to be considered once we conduct the audit. I have some content on this also in the upcoming slides. Promotion, retirement schemes, staff advances. So this promotion and retirement schemes can also be defined by, it can be different from state government to state government. It can be different from government schools and for private schools. So whichever is applicable, as per that only we need to convert it into financial terms, so that to understand the impact on the financial statements and ultimately how do we carry out the audit of the same. So this you get to know about this once you discuss with the management. And lastly, at the time of retirement, as I had said before, there can be an implication in the form of leave encashment. Now, in some schools, the leaves could be encashed. or sometimes there could be a policy regarding lapsing of the leave. So how that calculation takes place, then the gratuity, ex gratia payments, that even after the person has left the school, if there's any pension policy that will be given over the years, provident fund, and recovery. Sometimes there could be a policy existing in the school regarding giving certain salary in advance or salary in the form of loan to the teachers or the non-teaching staff. So that record needs to be maintained properly because that amount has to be recovered back from the teachers as well. So this becomes very important, and especially at the time when the teacher is about to exit the school system, whether it could be before retirement or at the time of retirement, so to ensure that all the dues have been recovered from the teacher and then only he or she exits the system. Next, in the process flow, we have regarding inventory management. This is a very basic, any organization which has inventory management, it's very common process flow, which talks about procurement, that how do you buy the inventory, then how it is consumed at the school level, and disposal if required. So if you look at the financial implication, obviously there needs to be a budget committee who approves that what kind of inventory needs to be purchased, whether it's in the form of, it could be books or it could be anything that is distributed to the students. So first, obviously, approval is of utmost importance. And that is how, if just to mention it, we have this document called Delegation of Authority Matrix, DOA, we call it as a short form. So that needs to be in place, wherein it is defined that who will be approving the budget for the same. Then, once this has been done, in the next step, we have regarding the obtaining quotations and bids from different suppliers out there. Now, depending upon whatever you are procuring, and sometimes there are certain vendors who are empaneled on the management committee, or if you look at the past trend, they are empaneled because the tenders already have been floated out. So these are the vendors from which the order has to take place. If it is a first time ordering, then the entire request for quotation, request for proposal, the entire process takes place. And depending upon the criteria, which is basically when you do whichever gives you lower cost and the highest quality, those parameters need to be defined basis whatever inventory you're procuring. Then you shortlist the vendor, and this is how we reach to the next step. So these two are interlinked. Again, depends if you already have an empaneled vendor. So not empaneled vendors can be numerous. So you can pick depending upon whatever you're trying to procure. And if it's the first time onboarding, then this needs to take place. And then you ultimately select the supplier. So supplier or vendor. Once the supplier has been shortlisted, we go on to the preparation of the purchase order. Now, again, there needs to be a procurement team who looks after the entire process, right from the approval of the budget, then whatever quotations that need to be floated out, and supplier selection. Once this has been done, depending upon what the budget was approved and the quantity and the amount that was approved for, and you also need to define the period over which the order needs to take place. Sometimes it could be a one-time order. Sometimes the order could be placed at defined frequencies, whether it is quarterly, half-yearly, yearly, depending upon what you're procuring. And you prepare the purchase order to be shared with the vendor, which becomes a part of the sanction. Once the purchase order has been shared with the vendor, then the purchase order is processed by the vendor, and then he supplies the goods, and and procurement can take place accordingly. Obviously, at this stage, we also have certain steps regarding the agreement that takes place with the vendor, whatever the payment terms have been settled, so that everything is in line with the PO and the contract. This ABC analysis and level setting is basically a costing concept wherein you need to see that which items need to be procured first, depending upon the importance. And also, it should not have an adverse financial impact on the finances of the organization. Last is the sale or issue to students or consumption in the institution. Now, suppose, for example, we are procuring library books, which become part of the inventory. Now, they could be issued to the students. There could be a time wherein a fete or a fair is taking place where you're selling out these books. So how that disposal needs to take place, which comes under this part of the process flow. This is defined under this process. So all of this, again, it has a financial impact on the financial statements, and it is important that these sub processes are followed so that the inventory is managed in a smooth manner. Lastly, we have the fixed assets. So again, like any other organization, there are some core sub-processes which relate to the fixed asset management. So first we have the procurement again. Now the procurement of the fixed asset, again, this will be very much similar to the procurement of inventory only, because there needs to be an approval committee in place who approves that what is the requirement, why do you need certain kind of fixed assets, like smart classes or maybe laboratory equipments or could be computers, because these entail quite a lot of cost to the organization. Then next we have the utilization, the purpose for which that fixed asset is being procured. Next, maintenance. Now, depending upon the useful life of the asset and the depreciation and all is catered into this part of the process flow. And next we have disposal, which is when you retire the asset. Now, depending upon it could be damaged or over the years life has been, finished. So then you cannot use the asset any longer. So let's have a look at the financial implications of this process. So, as I had said, purchase of fixed assets which can entail like furniture, fixture, vehicles, machinery, etc. Then, obviously, once these have been procured, depending upon who has approved it, what all vendors are placed. Again, this is very much similar to what we had discussed in the previous slide. Whatever the procurement of inventory takes, it's very much similar to procurement of the fixed assets only. So here, we need to maintain a fixed, we as in the school, has to maintain a fixed asset register called FAR, wherein you need to label or mark the assets as per the unique code which you take out. So that, because obviously in a school, the fixed asset volume is very high. If you look at depending number of sections you have, number of classrooms you have, so the furniture would be multiplying accordingly. Then there could be projectors, there could be vehicles, the sports equipment. So the volume of fixed assets is very high in any education institution like school, colleges, and that is why this fixed asset register maintenance becomes of utmost importance. And also this entails the physical verification process as well. I will like to cover here only. And once these asset register is being maintained, there is proper labeling. Then only you'll be able to verify it physically. If an asset is labeled as X, that asset X I should be able to locate. And sometimes this is a very common process of asset movement in an organization, because sometimes, just to give you a small example, you've moved certain desks from one classroom to the other because the number of students were high. So that labeling needs to be done. I'm just giving a very small example in the entire school, but there could be other such movement as well. So that the location needs to be captured at the fixed asset register level only, so as to ensure that the fixed assets have been properly recorded. Because on the basis of this only, you will be recording in your financial statements, then you will levy the depreciation, and hence the financial reporting process will take place. Hence, this becomes a very important audit evidence once you carry out the audit of the fixed assets. Next in the process, we have construction of building and premises. Needless to say, the school is obviously in a building, and sometimes you construct certain laboratory, or maybe you add on to the building structure, and sometimes maybe you add a sports complex or an auditorium. So these are not very common, but yes, these are one-time expenses which are big, and the amount involved is quite high. So proper accounting of this needs to take place, and whatever evidences, whatever amount is being given out. Again, for this construction of building and premises, again, there'll be an approval committee. Why do you need it? What's the purpose? That process needs to be taken care by the management and the finance team. And accordingly, you account for and provide depreciation on the same. Next, see, like I was saying, that the approval has to be taken place for the construction of building and premises. So this particular point is related to the above point only, which talks about the involvement of contractors. So in involvement of contractors, we have 3 further sub-processes where you again float bids so as to understand which contractor is suitable for construction of that particular building. Sometimes there could be a specialized contractor for someone who is converting your physical class to a smart class. So you will reach out to those kind of vendors. So this all is covered under the bidding and the allotment sub process. Then we have the CWIP. CWIP is the capital work in progress, that during the year the building construction has not been completed. It is still ongoing. So you cannot recognize it as an asset and provide depreciation on the same. But the expense is a capital in nature. So that will be classified under capital work in progress. So that identification needs to be done at the school level itself by the finance team, by the management, and then accordingly recorded in the books of account and reflect in your financial statements. So this also becomes part of the fixed asset process flow. Then advances. if there are advances, certain advances have been given to the contractors because they need money to procure the material and labor. So that needs to be marked properly in the financial statements as to which, and especially you need to, for better financial reporting, it is advisable that the advances to a certain contractor for which particular asset is being given, if that kind of disclosure is given, so that results in a good or a proper financial reporting. And last is retention of caution deposit. Sometimes, now this again depends upon the policy of the school. It's a good to have practice that you take the caution deposit from the suppliers, so that because it's a capital intensive work and the amount involved is quite high. So if that is, this kind of policy is present to retain the caution deposit, so how the accounting has taken place, how it is recorded in the books of accounts, and finally reflecting in the financial statements, this also needs to be taken care of. So with this, we have understood a few basic process flow which exist in the education system. And now I think it becomes essential for us to understand what are the key characteristics of the financial statements pertaining to an educational organization. So I'll cover basically those aspects which are particular only to schools. So very basic, we have these as a type of financial statements, the balance sheet as the end of the year. Then we have income and expenditure account for the year instead of profit and loss account, because normally any school is a non-profit making organization. Then we have receipts and payment account for the year. Now this is in addition to maybe a corporate entity or a proprietor or an LLP. And then needless to say, we have the significant accounting policy and notes to accounts. So these four are the basic financial statements that a school needs to make and which are ultimately audited by us as chartered accountants. In addition to this, depending which level of school you are auditing, cash flow statement may or may not also be required. So we'll just quickly understand the balance sheet items first. So here, one of the main headings that we have in the capital side of the balance sheet item is the fund employed. And under fund employed, we have two categories. One is restricted funds and the other is unrestricted funds. And under unrestricted funds, we have this category called the general fund. Now, general fund is also further classified into two categories. One is the fund contributed by the promoters, which means that these funds, they do not have any restriction on the use and they have not been designated for any specific purpose. That is why they are classified under general funds, that they are being just contributed for the overall development of the school and they are not allocated to a certain procurement of a certain asset or for carrying out a certain activity. And the other part of the general fund is called funds related to non-depreciable assets, which do not require fulfillment of any obligation. So this is basically the grants and donations which lead to non-depreciable assets. So this becomes part of the general fund. Further, in unrestricted funds, after you have displayed the general fund and then further classified into, promoters' contribution and the other part of the fund, next, we have the surplus and deficit, which is basically the excess of income over expenditure or either way. So it is basically balance of the income and expenditure account, which is reported under the funds employed unrestricted fund section. The presentation looks something like this, where you have the opening balance. Then if there is excess of income over expenditure after appropriations, then obviously it's a positive figure. And if it is the other way around, then you have a negative figure, and then you report the balance at the year end, which gets reported under the funds employed unrestricted funds. Further, under unrestricted funds, we have a designated fund also, which basically, designated funds mean that the funds that have been designated for meeting any specific purpose or future commitments. For example, there could be a fund that has been contributed by a donor for construction of an auditorium of the school. So now it is a very specific purpose that this fund is to be allocated only for construction of the auditorium, but for not any other purpose. So that kind of a fund will be reported under this particular heading. Now that we have understood unrestricted funds, the second category under the funds employed, which is given in the capital side of the balance sheet, we have the restricted funds. And restricted funds, we have 3 or 4 subcategories. They could be an endowment fund. They could be funds relating to depreciable or non-depreciable assets which are yet to be required. Then deferred income balances of grants and donation. So what happens is that once we get a grant and donation, the entire amount is not capitalized, as and when, if it is relates to a revenue item, as and when the expense is incurred, to that extent we recognize it as income, and the balance, which is a deferred income balance, is reported under this particular funds employed restricted fund section. And apart from this, we also have funds related to revenue expenditure, which are yet to be incurred. So if any of the donations or grants or any of the funds that the school receives falls under either of these categories, they need to be reported under the restricted funds section of the funds employed. So I've also mentioned here that we need to give separate disclosure for different kinds of restricted funds. So it becomes easier for the users of the financial statement to understand what is the purpose of the restricted funds that is being displayed in the financial statement of the school. And this is how you need to disclose a designated and restricted fund in your financials. Obviously, we have the opening balance. Then if there's any addition that has been made, along with notes that which purpose the fund has been received for, from whom the fund has been received for. Deductions if you've utilized the fund to carry out, the purpose for which the fund was received, and the balance at the year end. And another note that needs to be made here is that any current assets, whether in the form of bank balances or investments, which represent designated or restricted fund, they need to be disclosed separately below this section only, because it relates to the designated and restricted fund. Then next, in the balance sheet side, we have the loans. So this is very much similar to the financial reporting that is done for the other organizations, where you need to classify the loan into the secured and unsecured element. And where you have the secured loan, you should mention the nature of security. You can give a separate note beneath the loan section. And if there are any interest-free loans, now because this is an educational organization and this is being done for the betterment of society, there could be some organization which could be giving interest-free loans to the schools so that they can carry out their operations and they do not have to bear any additional interest expense. So for this, this needs to be shown separately from the interest-bearing loans in the financial reporting. Next, we have the caution money from the students. So if you recall my slide on the student process flow, where I had mentioned that whenever a student takes admission, there are certain security deposit that the school takes from the student. It is refundable in nature, so it is called caution money. And this caution money has two impact on the financial statement. One, it is represented as a balance sheet item, and it also forms part of the income and expenditure account, which I will show later. So in the balance sheet, the reporting has to be divided into two parts. First, any amount of caution money, which is refundable to student beyond 12 months, will come in the non-current aspect. And any amount which is to be refunded within 12 months, then that needs to be reported in the current aspect. So what basically happens is we have the school roll wherein the students are listed and we know the date of joining and we know the date of graduating till class 12th. So obviously there is an idea that whoever will leave the school after class 12th, the caution money needs to be returned to them. So that will be classified as the current aspect because in the next year, the next batch, the student will not be available and this money will be refunded to him. So by default, the school's financial system should be such that depending upon taking the date of leaving as the graduation date of the student, this classification should be done automatically. Other than that, there could be instances like transfer of the student or the student has been suspended or he leaves the school midway. In that case, the caution money classification has to be done manually, because this is an exceptional circumstance. Let's move ahead. Next in the balance sheet items, we have the fixed assets. So very quickly, I'll just walk you through this. So in the land, you can include both freehold and the leasehold land. In the buildings, normally the kind of buildings that a school entails is obviously the school building where the classroom, staff room, and all the student and teachers are present. Then in addition to this, we have the hostel and staff residential buildings. Some schools, they provide this kind of facility. Then office buildings where the administration block is different from the school. Temporary structures and sheds, for example, they could be a canteen, there could be any shed in the sports area. So sometimes we also have a sport building which is separate. There could be an auditorium which is separate from the building. So all these will be covered under the building section of the fixed assets and will be recorded accordingly. Plant and machinery. Now, what are the common plant and machinery which entail to a school? We have the air conditioner, there is a generator sets, television sets, fire extinguisher, etc. We also have laboratories, we also have computers which can be used, and I've given it separately here because the depreciation rate is different. So all these are included into the plant and machinery segment. Then next category, very important, we have the vehicles. So obviously, majority of the schools, they provide their own transportation and they have a fleet of buses. There could be lorries, vans, cars, scooters. Sometimes you also have certain transportation for the movement of the principal and the teachers, or there could be 2 or 3 vehicles designated to carry students for doing some competitions and all. So all these need to be classified under the vehicle category of the fixed assets. Next, we have the office equipment, which includes your photocopiers, your fax machines, then your telephone systems, the typewriters, duplicating machine, etc. So whatever machinery that is being used at the staff room level or maybe at the administration block, all these are classified under the office equipment of the fixed assets. And next, we have the computers. Now, computers can be from the both side. These days, even teachers need to carry their own laptops and all, depending on which kind of school they are in. So that asset is also covered under this computer category. And obviously, we have the computer labs for the teaching of the students. And all this also be classified under this category. Then we have the furniture and fixtures. Like I had said before, this is a very important aspect in a school because all classrooms, there will the students sit. So we have the desks, benches, cabinets, almiras, tables, chairs, and partitions. So all these are majorly covered under furniture and fixture. Very importantly, we also have the science equipment because there is a laboratory which is facility given to the students. So which majorly comprises of the microscopes, telescopes, dissection equipment, glass apparatus, measurement instruments, and other type of any other laboratory equipment which is applicable to the students. Then we have the sports equipment, wherein you could have an entire gym dedicated to the students. And for example, there's a cricket kit or a table tennis table. Then you also have a basketball court, a swimming pool. Now that asset will be a separate category. So all these are covered into sports equipment and are classified under the fixed assets. Apart from these, we also have the library books because library again is an important function of a school. Light stock may or may not be available now depending what kind of facilities are providing to students. So if it is there, so it will be classified under fixed assets. Then we have the intangible assets in the form of computer software or licenses that school might have taken up. For example, there's a World Book Encyclopedia for which a license has been taken by the school. So that will be classified as an intangible asset and come under this, or any other software that the school entails for the betterment of the students, teaching staff, and non-teaching staff. So all this is classified under the fixed assets and forms part of the balance sheet. In addition to this, there's certain disclosures that need to be given, like if there has been advance payment that have been made to contractors and suppliers, then they will be disclosed as a separate item, but not to be classified as the cost of the fixed asset. This, in fact, if you remember, when we were discussing the process flow of the fixed assets, we had covered this aspect there. Next, in respect of, okay, now there could be an instance where certain assets will be donated by donors. They could be maybe, sometimes in a computer lab, certain laptops are donated, or in a science lab, certain scientific equipment is donated. Sometimes sports equipment is donated. So if it is a donated asset, then for better financial presentation, it is always advised to give a separate disclosure for donated assets. And sometimes not donation can also be in two forms. Like the donation could be that directly the laptops have been donated, like donation in kind. So in the classification that needs to be done is that they have been received free of cost as a non-monetary grant. And sometimes the assets are financed, they give you the amount and you go and procure the asset yourself. So that also needs to be mentioned here. So we have written here that the disclosure can go something like this, that the assets have been received free of cost as a part of non-monetary grant or donation by the school, as well as assets financed under a lease agreement. And if there's any restriction on utilization of asset, now that depends, that could be a part of the grant and donation, which mentions the terms of usage or utilization of particular fixed asset, then that also needs to be additionally disclosed in the notes to accounts to the fixed assets. Next, in the balance sheet items, we have the CWIP, the capital work in progress. I've already explained. This is basically the capital expenditure, which is done on incomplete construction work. Then we have the investments. So in investments, again, this is basically classifying them into long-term or non-current investment and current investments. Now, there are three major sources of investment that the school can receive, broadly classifying them into central government, state government, other securities. So depending upon what kind of investments the school has made, the financial reporting is done accordingly. Current assets. So now first category that we have is the closing stock. So in this, to give an example, there could be materials held by the school canteen, like if the canteen is being run by the school itself, the ration, maybe it could be the utensils, etc. Publications held by the school for sale. Many schools, they take out their own magazine or newsletters that are, and the fee of the same is incorporated in the fees that the student is taken from the students. So all this will form part of the closing stock, and whatever process flow we did for the inventory management will come into picture here. Then donations and grants receivables. For this, the condition, I have some slides on the recognition of donation and grants, so we will cover it there. But to give you a small taste of the same, so only those grant donation are to be included where there is reasonable assurance of them being received, and they will be reported under the current asset section. Then we have bank and cash balances. This has been written by mistake, so please ignore this part. So basically, bank and cash balances, whatever bank account balances you have there, if there's any cash being retained by the school, needs to be reported here. And other current assets, whatever there's a leftover category for the current assets, will be reported under this part. And to give an example, there could be interest accrued on investments. So all these forms part of the current assets element of the balance sheet. Then we have loans, advances, and deposits. So advances to staff. Again, if there is a policy in the education organization to give advances to the staff, then how it is being recovered, you need to understand from the management. And it could be both interest and non-interest bearing. Again, for this, there should be due permissions in place. There should not be an instance wherein the approval was given for an interest-bearing advance, but ultimately no interest was being recovered from the school teacher or the non-teaching staff. So this kind of aspect is covered under the loans, advances, and deposits. The next, advances to suppliers and contractors. For any kind of procurement that the school is making and any advances that have been given for such procurement, they will be reported here. If there are other advances in the form of cash or kind and any prepaid expenses the school has made, you categorize them here. Then deposits, very important. If you have made any telephone, electricity deposit that the board takes from us, and any kind of amount which is recoverable in cash, then all this needs to be reported under the asset side, under loans, advances, and deposits. Current liabilities. So the first category that we have under current liabilities obviously is the creditors for the goods, services, and other statutory liabilities. Then again, caution money from the students. You remember we had talked about caution money in the previous slides when I started the balance sheet items. So the caution money which was required to be given beyond 12 months will be reported in the non-current aspect. And the current liabilities, that kind of caution money will be refundable during 12 months on the balance sheet date with the following bifurcation. So this becomes very important to showcase that whether the caution money is being refunded to whether the caution money belongs to the current students or the ex-students, because sometimes what happens is that student has left the educational institution and the caution money has not been refunded due to some reason or the other, and then you need to retain that money. Sometimes they forget to take it, so that the liability does not come on the school that they did not make any efforts to return that money. Hence, this bifurcation becomes very important at the financial reporting level itself. So when the school reports the caution money from students, which is to be refunded within 12 months. Remember, I'd spoken about the students who have been graduated. So that we know because we are keeping the record that which student has reached which class and when the student will leave the system of the school. So that will be coming here. Apart from this, if any other student has left and when the financial reporting is taking place, you have an idea that within these 2 months, the student will be transferred to some other school or it could be suspended, and that the caution money belonging to such students should also form part here and the other side, depending on the timing of refunding of the caution money. Then we have the other current liabilities. So any current liabilities which are recoverable in cash or kind, and any any expenses that are not being paid till date, that will be covered here. Provisions. So like when we were discussing the hiring process flow of the teachers, the last part entailed retirement. So when you talk about retirement, with retirement, we also have certain salary liabilities in the form of PF, it could be gratuity. So any provision that needs to be done will form part of the current liabilities and will be shown in the balance sheet. Now that we've discussed the balance sheet items, I think it is better that we move on to the income and expenditure side and understand what kind of income items are there in an income expenditure account of a school. So there are various heads under income. So basically, the fees from the student as a whole is commonly categorized into these categories. We have the tuition fees, which obviously, whatever education you're imparting to the students, that component is called the tuition fee. Then the admission fee. This is normally a one-time kind of a fee. In fact, I have made 2-3 slides on describing a different kind of fee and how the counting has to be taken place. I think we'll address the definition part there. I'll just walk you through the kind of fees that is charged from the student and which forms part of the income and expenditure account. Then we have the registration charges for a particular event or for any particular activity. Then the examination fees. We also have transportation charges. Examination fees basically the fees is paid to the board. Then the transportation charges depends if you have your own fleet or if you are contracting it out. Annual charges, hostel fee, whichever is applicable. And apart from this, any fines or penalties that you recover from the students, which is situational, of course. Then, apart from this is the general fees that you take from the students. Now, there are some activity-related fees which can be recovered from the students. Now, this is compulsorily levied on all the students across, majorly, except for maybe hostel fee, because not every student is a hostler. But fee from student for activities, in this, you need to understand if these activities are compulsory for everyone. For example, library fee, I think, would be compulsory for everybody because everybody will be accessing the library. But sports fee may or may not be applicable to everybody. Not everybody may not be participating in the sports activities. So we need to understand how is this fees being gathered, what is the basis, then only correct recording and accounting, and finally the financial reporting will take place. So when we talk about fee from students from activities, majorly we have the sports fee, library fee, science fee, and the computer fee. Apart from the fees, any other source of income for a school entails donation and grants from various organizations. Then income from sale of admission forms, prospectuses, magazines, and other publications. Now, this is where the sale of inventory part comes when we talked about the inventory management process flow. That if there is any other activity wherein you sell the inventory, so that accounts for additional income for the school. Then income from canteen contracts. This is when you sell the canteen goods, whatever money comes there is also taken into the income of the school. Rent from school premises. Since school premises are quite big, they could be, so we have a client which has a bank ATM on its school premises. So they earn rent from such ATM, from the ATM of that bank. So this is one example. Sometimes you could have a uniform shop. You could also have some other commercial establishment, which is obviously related to the school activity, which is present on the school premises, and that could also entail additional source of income to the school. Then invigilation fees received from the board, board as in the examination force. If you're aware, sometimes the examination boards, they recruit the teaching and the non-teaching staff of the school to carry out invigilations across various centers, especially when we talk about the board exams. So at that point of time, they give fees to the school because they're using the resources, the teachers of the school or the non-teaching staff of the school to carry out the invigilation activity. So that is also covered under the income. And annual charges, if any, that are taken by the school from the students or from the staff as well. So all these form part of the other income part of the income and expenditure account. Apart from these, we also have income in the following manner. So there could be instances wherein the school organizes various events in the form of annual function, sports carnival, fetes, fairs, educational tours. In this case, what we need to understand is when the financial reporting takes place, is that you just obviously whatever fees you're taking from the students, and from the, you go and sell the fare tickets or maybe the sports carnival, etc., the gross receipt is not to be reported wholly. You need to reduce the direct expenditure from them, because we need to, this is not the income. The income part would be the net element that gets remained after the expenses have incurring to that particular activity. So that is why, if all four of these are applicable, it could be more activities also from holding events, then you need to display it in such a manner that you give the gross receipts first, you reduce the direct expenses which is applicable to that particular activity, say the annual function or the fetes, and whatever net amount is remaining, that is reported as income in the income and expenditure account of the educational institution, and accordingly reporting takes place. So now that we've understood the various form of incomes, we also have some indirect income which can be earned by the school. So it could be in the form of the interest and dividends. So if the school has made investments in the form of fixed deposits or any other investment that is allowed by the management and the applicable statutes, so whatever interest income you're earning on that and dividend you're earning needs to be reported in the financial statements. Then this is a very exceptional activity wherein you sell the fixed assets or investments and you realize them and you report the profit here. Then income from estate and any other miscellaneous income that the school earns needs to be reported here. So now that we've understood different kind of income of the school, before we move on to the expenditure side, I would like you to walk through the revenue sources. Some I've explained in the earlier slide. There could be a slight repetition, but I think it's important for us to understand. Then only we'll be able to understand the auditing aspect of the same. So we had spoken about the tuition fee. So tuition fee, as the name suggests, that whatever education that you're giving to the student is covered under this part. Now, here the challenge comes is that sometimes the academic year is different from the financial year. Majorly in schools, now depending from area to area, it could be July to June. Sometimes if it is in line with the financial year, then well and good. If it is different, so in that case, the fee needs to be recognized in the following manner. If the fee for next financial year is received in the current year, then you show it as liability in the balance sheet, and then you recognize in the next financial year. And if the fee for the current year is to be received in the next financial year, you recognize it as revenue in your financials. So this is how the correct accounting takes place in case of an instance where the academic year is different from the financial year, because the tuition fee is collected as per the academic year, not as per the financial year. Then we have the one-time fee. So one-time fee basically covers your registration fees, admission fees, which is non-refundable. And this has to be recognized as income as and when it is received. So again, caution money is different from one-time fee. I'll come to that later. This fee is non-refundable, and that is why it is there in the income and expenditure account. And only on receipt basis you book this. The caution money. So it is refundable when the student leaves from school. So one-time fee also covers caution money, but the only difference between maybe the annual charges and registration charges and caution money is that the first two are non-refundable in nature, but the caution money is refundable in nature. That is why accounting for both of them is different, and the auditing will also be take place in a different manner. So like I've written here, the nature of deposit of a caution money is of a liability, and because it is refundable. So it is converted to income only in the following circumstances. First, when the student waives his right to receive the caution money. Sometimes there could be certain defaults that a student incurs. Now, depends whatever the management policy defines. That the student is not now eligible to receive the caution money at the time of exit. So in that case, that liability gets converted to income for that particular student. Next instances wherein the caution money is forfeited by the school. That again, this is also a circumstantial, depending upon whatever circumstances are in place as defined by the management policy. The school forfeits the caution money, and then that liability gets converted to income. And last instance, if it is not claimed by the student, I already explained this, that at time of exit, whether it is a time of graduation, whether it is time of leaving of the school, if this the caution money is not claimed by the student, that means for a particular years. Now again, the management can define for how many years this caution money needs to form part of the balance sheet also, and when can be converted into income, because we know after a certain period, this amount will not be claimed by the student. It could be forgotten, or maybe the student is not, we're not able to contact the student or his parents to collect the caution money back. And then in that instance, because the caution money is not being claimed, it becomes part of your income. So this timeline I've given to explain when the caution money will be classified as current liability and non-current liability. So it becomes easier. So if we are sitting in FY 23-24 and we know that the caution money, a particular element of caution money will be refunded to the students in the next financial year, because we know the students will graduate in 24-25. So we need to pay them. So for that surety, at least to that aspect, the caution money will be classified as current liability. Beyond that, whatever caution money is available, we will automatically classify them into non-current liability. So this is how the financial presentation for caution money takes place. Then sale of prospectus. Sale of prospectus is again a part of the inventory. So we need to recognize the revenue relating to sale of prospectus as and when the sale takes place. Canteen income. Now, canteen income can be divided into 2-3 circumstances. The first instance is when the canteen is owned and run by the school. So in that case, whenever you're selling the goods from the canteen, whatever food items that are being sold to the students, you recognize the income at that point of time. So here, that is how you recognize the revenue. Next instance is when the canteen is being run on contract basis by a third party. So you outsource the management of the canteen. You have your own premises, but some third party comes and manages everything there. So in that case, whatever contract period has been settled between you and the outside party, on that basis, on time proportion basis, you recognize the revenue. Then next instance we have this canteen entails to the mess or the kitchen or the eating hall which belongs to the hostel premises. So this is only applicable in instances where there is a hostel facility provided by the school. So herein, where the hostel students they pay fixed amount per month, then again, as and when the charges are being received, or when you do a time proportion basis that for this particular month this amount was received from the students, we recognize the revenue. So depending whichever instance your situation falls in, the income has to be recognized accordingly. School premises given on rent. If you recall, I had given an example whether a bank runs an ATM on the school premises, or there's a uniform shop which is being run by a third party. So that person is using our premises to sold his goods, or that bank is using our premises for running the ATM. So the rental income, again, there needs to be an agreement in place that has to be time bound, and whatever terms and conditions have been defined along with the rentals, this should be recognized on time proportion basis for which the rent is being received, and then you give the effect of the same in the financial statements. Hostel fees, again on time proportion basis for which the fee is being received. Transportation facility. Now, transportation facility can also have two circumstances. First is when the school owns its own fleet of transportation. So then you recognize it over the period during which the concerned facilities are being supplied by the school. So that is why you have the transportation fee element when you charge the transportation fee there on time basis. Then next is wherein you do not own the fleet yourself, but the transportation facility providing services has been contracted to a third party. So again, whatever contractual terms are there and whatever fees you are paying to the third person contractor, your income will be recognized accordingly in the financials depending upon that contract. Next, we have supply of books and uniform, etc. Again, depending upon what are the terms of the contract with the third party, this particular income needs to be accounted for. Then here also we can have two circumstances. Sometimes there is lump sum payment which is need to be made to the contractors. Then you recognize it, you divide it and proportion it over the period of the contract between the school and the third party. Sometimes you need to pay commission received on the basis on this value of the goods sold. That this is the term of the contract between you and the third party. Then whenever the sales are made by the contractor, you will recognize the income. Next, we have the sponsorship fees. Now, sometimes the school premises can be used for advertisement purpose also. They could be like a uniform, or maybe some a smart class service provider, or some coaching class, or all these organizations, they can reach out to school because they feel their potential customer is there. So in the form of banners, in the form of hoardings, all these can be put up in the school. So whatever amount you receive from them forms part of the sponsorship fees. So this needs to be recognized in the period when the concerned function is held, and this also becomes like an additional source of revenue for the school. Advertisement for school magazine. Like I mentioned that the school, we also publish certain magazines and certain newsletters. So in that case, whatever advertisement appears there, that can also be a revenue generating source for the school. And this needs to be recognized in the period when the advertisement appears in the magazine. Magazine is normally an annual feature, but depending on whatever the school policy, school rules are there, it can vary. Amount received from board for payment to exam invigilators. So this is the invigilation fee that I have talked about. So we have two parts in this. So first is the amount is received from the board. So whatever amount the board pays to the school, you recognize that as income first. And then whatever amount you pay as invigilation fee to your teacher, this is in addition to your CPC, addition to the salary that you're paying to the teacher, that we recognize as the expense. And the net amount is reported as the income. So there are two ways of defining it. If we refer to the guidance note on the accounting for schools, it does not mention to club it together and show it. So I think either way it can work, where you show the expense part and the income part separately, or you can show it together for better financial reporting. Now, there could be an instance that you have received the amount from the board as invigilation fee, but as in the balance sheet date, you could not distribute it to the teachers. So that needs to be disclosed as current liability in the balance sheet item. So this entails any invigilation fee that you receive from the board. So I've given a diagram here to explain this. So this is the board fee. Now, obviously, every school is affiliated to any examination board, like we have the ICSE, CBSE. Very recently, we also have the Delhi Board of School Education. This is for Delhi State. Other state boards also follow the same principle. So this is the category of revenue called the board fee, wherein the first student pays to the school. So this becomes my income. The school collects the board fee from the student, and then this board fee is further paid by the school to the examination board for the affiliation purpose. So this is how the process flows. And if there's any fee which has been collected from the school, which has been basically shown as income in your books, but it has not been remitted to the board, that needs to be shown as liability. Why we are showing the invigilation fee not distributed as liability, or any examination fee not given back to the board as liability? Because ultimately it is not my income. Ultimately that amount will be expensed off. So for the better and the true and fairness of the financial reporting, that is how this kind of disclosure is mandated in the income part. We are done with the income part of the income and expenditure account, and let's move on to the expenditure part. So what are the common expenses that the school needs to incur? So first, and I think which forms the major part of the expenses, is the staff payment and benefits. Now you need to disclose it separately for the teaching staff and the non-teaching staff. And we have obviously the salary and wages. Then if there are any allowances and perks that are given to the teacher, that will be included here. Employee welfare, which includes your retirement benefits also. Now, invigilation charges paid. If you remember from my previous slide where I was discussing invigilation fee. So this charges or this fee is separate for the teachers apart from the salaries and the benefits, and other employee costs that the school incurs. So for this, the payroll team needs to be very strong, because again, the school teaching and non-teaching staff volume is also quite high. And again, how strong is the system to maintain that? That has a direct impact on the financial reporting. Transportation expenses. So again, depending if the vehicles are owned by the school, then the expenses will be different. And if the vehicles are not owned by the school, then the kind of expenses that the school will entail is kind of a rental and any other maintenance expense that they might have to pay to the contractor. Apart from these, we have the affiliation charges, which is to the examination board. Then the board examination fee paid or payable to the board. Now, board examination fee is separate from the affiliation fee, because affiliation, I think there's an annual charge that you need to incur so that the students of your school can give the exam. And then the board examination fee is different. Then if there's a hostel being run in the school, so whatever hostel and expenses will be classified here in the expenses part. Then next we have the administration general expenses, so which can commonly comprise of the rents, rates, and taxes. There could be communication expenses, printing and stationery, electricity and water charges, travel conveyance for both teaching and non-teaching staff, insurance, promotional expenses, wherein you're giving advertisement of the school. Sometimes a school also needs to, advertise in the newspapers, magazines. These digital media is very in, so that kind of expense is also there. And then we have the auditor remuneration and others. Okay, next we have repair and maintenance, which basically comprises of the any repair and maintenance expense of revenue nature, not capital, which will be classified under buildings, furniture and fixtures, and others. Apart from this, in the expenses, we also have the depreciation relating to the fixed assets. Then, very importantly, the financial expenses in the form of interest on loan. Loss on sale of fixed asset investment obviously is an exceptional expenditure that will be written off to the income and expenditure account. Any other expenses? If there's any provision that you're making, so if you remember, we were talking about the retirement benefits. So that kind of provision will also have an impact on the income and expenditure account. Any other miscellaneous expenses? And is there any appropriations, like from the fund, when you're transferring to the fund or transferring from the fund? That impact will also be shown in the expenditure side of the income and expenditure account. Now that we've understood the financial statements, what all elements are there in the balance sheet and what all elements are there in the income and expenses, we can move on to auditing certain unique elements that are unique only to the educational organization. So first, I thought it was important to cover grants and donations. So first, let us understand what are the various kind of grants that an education institute can receive. This is not an exhaustive list. It's just for giving you an idea of what kind of grants are available. So these are basically specific grants which can be given for hospital building and maintenance. Then it could be for the building grant when you construct maybe the auditorium or the sports arena, or could be the library. Then we have the rent grant. Now this grant is basically financing in nature, that whatever rental expense that the school will incur will be funded by this particular grant. And we have the pension and retirement benefit grant. This basically entails your whatever pension fund that the school is maintaining, or the gratuity that the school needs to pay out to the teacher, the ex gratia, leave encashment. This is again a very specific grant, and to fund that, this grant can also be there. Grant for acquisition of equipment, furniture, etc. So this entails to acquiring a certain fixed asset. When we talked about maybe when a particular donor wants to give certain computers for the laboratory, this kind of grant will be covered here. Staff grant to basically fund the salaries of certain staff. So this grant can also be there. So these are few kind of grants that are received by the schools. There could be more examples also, but I just took some common examples to give you an idea that what kind of a grant an educational institution receives. So now let's go on to the audit part. So very importantly, how do you recognize a grant? So herein we need to refer to the accounting standard 12, which talks about the accounting for the government grants. So there, first of all, the thumb rule for recognizing a grant is that there needs to be a reasonable assurance that the grant will be received. That depends upon the terms of the grant and whatever agreement has been made by the donor and the educational institution. And depending upon whatever terms have been defined, whether those conditions that have been forming part of the grant document, they have been met. Only when these two conditions are met, then only you can recognize grant as revenue. So as an auditor, I need to look at the terms of the grant, the letter of the grant, the acknowledgement. You can also look for the payment proof. For example, if there was a certain expense that needed to be incurred, you can look for the proof that whether those expenses have actually taken place or not. So all these will entail, and then only you can substantiate whether the grant has been recognized properly as either as a balance sheet item or as a revenue item. So depending upon the form of grant, we can perform the following accounting checks. So if it is a non-depreciable asset, for example, a freehold land, then in that case, you need to ensure that the grant has been recognized in the restricted fund in the balance sheet item. So when we had started the understanding of the balance sheet item, I've already covered it there, that in the restricted fund, you need to mention the grant received related to the non-depreciable asset. Now there could be an instance where the time of fulfillment of the condition can be spread across different years, because the condition would be such. Now, an asset like land is not a small asset, right? So to acquire it can take years. So if uh, if the condition will be fulfilled over a span of certain years, then accordingly the grant has to be recognized in the proportionate manner over the life of the asset. So this needs to be taken care of while recognizing the grant in case of non-depreciable asset. Then we have the depreciable asset. Here the concept of deferred income comes in. So which states that the grant has to be recognized in the income and expenditure account by allocating it over the useful life of the asset in proportion in which the depreciation on the asset concerned is charged. And whatever balance is left in the grant will be shown separately in the balance sheet. So basically, a depreciable asset will have two elements of reporting the grant. One will be reported as a revenue item, which depends upon the useful life of the asset and in a proportion of the depreciation. And the last, the balance element will be forming part of the deferred income item, which will come under the fund employed part. And this will reduce over the years as and when the life of the asset increases. So this is how you recognize the grant, and we as auditor need to take care that if the accounting is done as per these rules or not. Then, yes. Next, we have the non-monetary asset. Now, sometimes, the grant is given in form of a kind. I mean, it is not given in an amount. It's not like any bank transfer. It is, for example, they give you some computers, or maybe they give you certain furniture, right? So that case, depending what kind of amount has been charged, you need to account for in your books. If the amount has been received at the concessional rate, so then you need to account them on the basis of the acquisition cost, whatever fair market value is going in the at that point of time of receiving the asset, when there's a concessional rate involved. If it is received free of cost, like it is free, I mean the donor has not charged anything at all, then in that case you need to record it as a nominal value of rupee 1. And if it is the grant is of the nature of the promoter's contribution, this I've already explained that this will form part of the general fund in the balance sheet. So these kind of checks need to be kept in mind whenever you are auditing the grants and donations. Now next, move on to the auditing of the employee benefits. Now, as I've already mentioned when we were discussing the various kind of expenditure that form part of the income and expenditure, employee benefits, including your salaries, wages, allowances, retirement benefits, everything, this comprises of a major revenue expenditure to any educational institution. And hence, its recording and accounting is very important for a proper financial reporting, and also becomes very important for us as auditors also to give our opinion. So this major expenditure, this includes all the payouts to the teaching and the non-teaching staff. And apart from the recording part, we also need to look at the statutory element, which talks about the TDS compliances under Section 192. And depending whatever employee benefits that are being passed on, it could be in the form of EPF and ESIC, that also needs to be covered and is a very much part of our auditing scope of work whenever we audit the employee benefits part. I will straight away jump to the retirement benefits because it's very peculiar to school. So we all are aware that for auditing retirement benefits, we need to refer to the accounting standard 15, which talks about employee benefits. Now, it has categorized the employee benefits into 3 to 4 elements, and depending upon which category this benefit falls, the accounting should take place. So first is that the cost of retirement benefits to be spread over the period of service of the employees. It's not like whenever you pay the employee benefit, then you need to account it for. You need to account it for during the tenure when the employee is serving to the organization. Next, we have the defined contribution scheme. Now, this could be an example of a provident fund. So whenever a school when a school is required to comply with the provisions of the employee provident fund, then you need to account for whatever the correct accounting is there as per the AS 15. In addition to this, they need to comply with the Section 43B and Section 3615A of the Income Tax Act, which basically, so 43B is
Sorry, friends, I think Asta lost network. Sorry for inconvenience. Let's wait for a minute. Yeah, just speaking again. Sorry for inconvenience. Asta, I think, dropped due to some network issue. She will be joining again in next few minutes. Friends, we have received a lot of questions. Those who have still not asked and want to ask can write in chats. So we'll ask Asta once she will join, and once she will complete her PPT.
Yeah, hello, I'm audible.
Yeah, Asta.
Yeah, I'm really sorry. There was some technical glitch at my end. My system had died down, so I had to disconnect.
No issue.
Unfortunately, I will not be able to present the deck because it was in the system only. There was some issue. So I'll just speak for another 5 or 7 minutes, and then we can start with the questions because I won't have access to the deck. So, like continuing from where I had left the presentation. So I was basically talking about the various kind of grants and donations that are being received by the educational institution. we were talking about the accounting that needs to be taken into consideration. And I think as in the form of the audit evidence, when it comes to grants and donations, we can talk about the terms, then the condition, whatever documentation has been shared by the donor, and if the conditions that have been mentioned in that document has been fulfilled or not, that needs to be taken care of when you recognize the uh, grant as the in your books of accounts and ultimately in the for a financial reporting purpose. Apart from this, one aspect that I wanted to cover, particularly for the educational institution, is from the income tax provisions. So, in any educational institution, it is basically run by a trust or a society, and it could also be an AOP, like the Association of Persons. So, in that case, we need to look whether that particular society trust is registered under Section 12A and ATG, as this also, I think, falls under the purview of the audit, because ultimately, whatever amount you are reporting as income over expenditure, that needs to be reported to the income tax authorities as well. So first, at any point of time, whenever you start the audit, I think as an auditor, we should go, what is the legal formation of that particular trust and society, and then what is the instrument that brings in that school into being. And depending upon that, if that particular trust or society is registered under Section 12A or not. Now, for this particular, when you check the registration under Section 12A, there's a Form 10A which has been issued by the Income Tax Act. So what happens is, I understand that Section 12A is first applicable to the charitable institutions, and first we need to understand whether the education falls in a charitable institution or not. So for this, we refer to the provisions of Section 215 of the Income Tax Act, which defines that what are the all aspects of the educational institution. Sorry, what are the aspects of the charitable activities in which education is also a part. So since because education falls under definition of charitable activities, so because of that, Section 12 registration can be taken by the schools. So if you want to check whether Section 12A registration has been taken by the school or not, you look for the Form 10A certificate. If that is available, the next step that you need to look at is whether they are registered as under a Section ATG or not. So Form 10A is separately applied for Section 12A and for Section ATG. It's not compulsory that any institute which has been registered in Section 12A will automatically be registered in Section ATG. When both of these are available, then only you are able to understand that and then see if the provisions for Section 12 and ATG have also been met. Another requirement for all the educational institutions which are registered under Section ATG is to file Form 10BD and 10BE, which was like a requirement which was started for FY 2023 onwards only. So you need whatever donations that you've been receiving. So there is a particular format that has been defined under the Income Tax Act and under the provisions of Section ATG, which needs to be followed by the school in addition to whatever books of accounts and all they're maintaining. So that the same reporting is done under Form 10BD, because you need to report to the institute that which all donors were there, what was the form in which the donation was received, their PAN, addresses and all. So it is ideally suggested that whatever format the institute has, the format the income tax authorities have defined, the same format should be followed by the educational institution for uniformity purpose. And once that has been reported, the next step that these institutes need to follow is filing of Form 10BE, wherein they issue certificates of donations to the donors. And this needs to be done by, I think, 31st May of the next year. So this is an additional compliance that the educational institution should look at whenever, if they are registered under Section 12A and ATG. Another section which is very commonly used by educational institution is Section 1023C of the Income Tax Act. Again, the requirements for that section is a little different from Section 12A and ATG. So since this is not an income tax related seminar, I'll not go much into detail, but I'm just trying to bring your attention towards what are statutes that we as auditors need to cover, in addition to, let's say, the TDS provisions, then the ESI and gratuity, EPF, etc. Another aspect that you need to consider is the GST as well. So when you look at from the GST point of view, I understand whatever major source of income that the school earns is exempt in nature because education is not covered under GST. But for example, a school who is, getting the tuition fees and the annual fees, etc., which forms part of your fee that you charge from the students. But let's say there's another revenue source in the form of advertisement, or a revenue source in the form of renting of premises. Let's say when I was talking about a bank who is leased out its ATM there, but that particular element is not free from GST. So the school has to, authorities or whatever the finance team and whoever GST consultant has been hired has to be very careful regarding this, that majority portion of the income is exempt, yes. So when you are filing your returns, whether it is your monthly 3B and R1, and when you go on to filing an annual return, the disclosure is made properly with this proper bifurcation between the exempt income and the taxable income. In fact, very recently, one of our clients received a notice on this only because that presentation was not correct. I mean, we had given the amount, but by mistake, the exempt component was not properly reported. So the department has also become wary of this fact that, in fact, the department is also very much aware that the schools are not only earning exempt income, but they're also earning taxable income. So that aspect also needs to be touched upon and taken care of. There could be other form of taxable income a school might be earning, apart from the exempt income in the form of education fees. Now, coming to the audit methodology, very briefly, I'll just explain you. First, obviously, you need to have the terms of the audit engagement, wherein there's a letter between the management of the school and yourself defining the scope of work, your responsibilities, and the responsibilities of the management, and whatever the preconditions of audit are taken place. Then, as an auditor, you need to understand the entity and its environment when you plan the audit as per the provisions of SA 300. So, you need to understand, you need to go through the documentation, the instrument that brought that school into place. What are the basic process flows that are existing there? Once you study the process flow, you also need to understand the risk environment. What are the standard of controls that are present in the organization or the school, so that accordingly you can plan your nature, timing, and extent of the audit procedures. And as and when, depending on whatever aspect of the financial statements you are auditing, when we had talked about the income and expenditure items, or they could be the balance sheet items, you need to see if the accounting has been done properly, gather the audit evidences, and then make the audit opinion, form the audit opinion, and give in the audit report. Apart from this, I think majorly I've covered everything. So because of the lack of the deck, I'm really sorry about that. It's never happened before. So I think I would like to conclude today's session here. And if there are any questions, I'll be happy to take them.
Thank you, Astha ji. Now we are moving to the query session. Our first query is how to proceed on donations, grants, and other income apart from the fee from the students.
Okay, so I think I've covered this in quite detail in my deck, it says. So just for the sake of repetition, I'll repeat it. So if the donation and grant, first of all, you need to refer to the provision of AS 12, which talks about the accounting for government grants. And depending the purpose for which the grant is being received, whether it's a non-depreciable asset, a depreciable asset, if it is revenue in nature, you do the accounting accordingly. And for donation, you need to take the provisions of Section 80G into consideration, because that's like an additional aspect that you need to consider apart from the accounting part.
Okay, our next question is, can we spend general fund for CAPX in educational unit run by the trust? Will it be added for the 85% spending for the financial year?
Okay, I think when it comes to the general fund, you're talking about the CAPEX, the capital expenditure, right?
Yeah.
That will be a depreciable asset. So I think in general fund, again, this was also covered. The depreciable asset part is covered. But I think it should come under the restricted fund part, because you are allocating that sum for a particular asset. So what are the terms and conditions? It depends how will you classify that fund. And then accordingly, this 85% utilization is again a part of the income tax reporting. When you compute, when you make the computation of any institution which has taken the benefit of Section 12A, they are required to spend the 85% of the amount utilized. So for CAPEX, I think the utilization is allowed as per the income tax provisions.
Okay. Our next query is, in case of some government engineering college rule under Section Rule 2BBB is not satisfied, and the income tax department is demanding tax on surplus, is there any suggestions?
Ma'am, I would like to skip this question because I have not dealt this kind of situation in income tax. If you have worked, or if Ashok sir has worked, I'll be happy to take your comments on this.
Now, Ashok ji, ask your question.
Just a minute. I think Anuji want to say something. Yeah. Acha. Thanks, Asta. I will ask the next question. How fixed assets got through corpus donation be accounted in parents' body accounts?
Fixed assets through corpus donation. No, so the fixed assets, again, like we had explained, the accounting for the fixed assets in the deck, it should be done as per that only. I mean, the provisions they remain the same. But when it comes to corpus donation, again, this is repeat to the first question that Meenal ma'am had asked, that whether it is, whether it needs to be defined as a general fund or restricted fund. Again, the terms, whatever are given there, the accounting will take place accordingly.
Okay, next question is government ads school run by a society. Teacher salary are directly credited to the teacher saving account by the government. How it can be treated in the society account?
Okay. Now, this is a government aided school. I think the society is a separate. No, so society is running the school. So ultimately, the accounts for society will be separate and the account for the school will be separate. Ultimately, they are clubbed. But this will be the expenditure in the hand of the school. So, when it comes to financial reporting, the this expense will be shown in the books of the school. But when you make the computation of income for income tax purposes, then they are shown as application of the funds with the teacher's salary.
Okay. And the next question is capital grant of fixed assets can be transferred to the capital fund or the corpus fund after construction of the assets.
After construction of the asset, it should come under the capital fund only.
Okay. Next question is there any limit on rental income from the school premises to the total receipt of the institution under the Income Tax Act?
This I'm not aware of. If ma'am, from your experience, because you are a direct tax practitioner, if you are aware, I would like you to throw light on this.
Okay. Next, all the questions are asked by the sir.
I have few
Okay.
questions more.
Yes.
Table tennis table and other equipments, how the same can be classified, whether it's being classified as current assets or what?
Sorry, I didn't get the question.
Table tennis table and other
Yes.
related equipments, how can be classified as current assets?
So they'll be classified as fixed assets, no? Under
Fixed
sports
assets, yeah,
equipment. This was given in the deck only. I
Yeah.
specifically given it there.
Okay. Next is whether subsidies given to the students need to be disclosed, like boarding school, orphanage, etc. in those cases.
I think for better financial reporting, yes, because this will be different from the fee grade or the fee matrix that we'll be having for the students. So if you're giving them at concessional rate, then maybe you can show as a reduction or maybe as a part of the notes to accounts because there'll be exceptional circumstances. And then from audit point of view, we need to check whatever the approvals were there in place or not. Why were these students shortlisted? What was the policy? And everything needs to be taken care of.
Another question is, does an auditor rely on MRL for the number and details of bank account established by the school? Usually
Okay.
schools have many accounts and
Yes,
even PAN
yes,
number
yes.
of teachers are sometimes used.
Right. This case, I think MRL is a good document to rely upon. Apart from this, if you've been appointed as an auditor for the first time, because bank list will any case be given last year in last year financials as well. So you can refer to that for the list of the bank accounts and check if those are in place or not. And the third check would be when you will ask for the balance confirmation. So whatever banks are there in place, the balance confirmation will be received. If that list is incomplete, then obviously you'll get to know that less banks have been shared with you.
That's that too. Independent balance confirmation is always preferable.
Correct.
Yeah.
Third party confirmation.
Next question is, if education institute has received any assets under CSR, corporate social responsibility, how the same should be recorded in books?
So first of all, you need to check whether CSR1 has been filled by this institute or not. And I think when you are classifying these assets, again, if the asset has been capitalized in the books, so like I had mentioned that you need to give a certain disclosure for donated asset or for the purpose of which that asset has been acquired. So additional disclosure can be given for the asset which have been received on the CSR fund and notes to accounts.
Question whether GST registration is required to be taken if the rent received by the school or college is approximately 1% of the total receipts of school and college and does not exceed 20 lakhs. However, the total receipts of school college exceeds 20 lakh.
So again, this I had covered towards the end of my presentation. So we practically do this for all our clients. If the total risk, because when you look at the registration provisions on the GST, they take into account all kind of income, both exempt and non-exempt. So if you're exempt and non-exempt sum exceeds rupees 20 lakhs, it is immaterial whether the non-exempt part of the income comprises only 1% of the total income. I'm not aware of this rule. But the 20 lakhs limit, if it has been crossed for like the sum of the exempt and non-exempt, then you need to seek GST registration and additionally disclose the exempt component in your returns and pay tax on the non-exempt component, whether it is rental, advertisement, etc.
Question is, any thought on internal control of fraud consideration while carrying out audit of educational institutions?
Yes, like I had said, when you plan the audit approach for any educational institution, you need to understand the control environment. Because right now, whatever deck we discussed today was from financial reporting perspective. Again, how the information is being gathered to report that amount, that also forms part of the internal controls. For example, let's talk about the caution money. I've spoken a lot on caution money. So the caution money has been correctly reported or not depends upon how the record of the students is being maintained when the fee is collected from the students, right from the time when the student has been onboarded and then the promotion has taken place, if there's any fine or recovers that has need to be done. So I think internal controls, and also when we do any kind of audit, as an auditor we are advised to understand the control environment of any organization, so that includes the educational institution as well. So from fraud perspective is also there. Like sometimes the funds can be not be utilized for the purpose for which the school has received the funds. Then sometimes the expenses, they may be just book expenses, but actually the expenses have not taken place. So all kind of situations can be there that you can understand once you go deeper into legis scrutiny and understand what kind of. So that is why whenever you take a school engagement, sit with the management, understand what are the processes. Like I'd given very basic process flows. You can add on them depending how big the educational organization is. And once you are able to establish that the recording is taking place properly or not, then only you'll be satisfied with the financial reporting process.
The question is, affiliation fee received by university for new affiliation and for extension is in capital nature if it is different from affiliation processing fee?
No. So again, I had, when I was explaining the different revenue sources for an educational institution, I had covered affiliation fee there. So affiliation fee is very much part of the income and expenditure account. So it will be reported there.
How to account for scholarship adjust from income or expense item separately?
So scholarship, okay, again, now depends. For example, so I'll take this question this way. The guidance note does not give any separate disclosure on the accounting for scholarships. So there can be two ways the scholarships can be accounted for. Either you show them just an expense, right? Or if you are, because what normally when you give scholarship, it is not categorized whether the scholarship is for the tuition fee component or for the annual fee component or for the sports component, right? It is like a wholesome amount, like 100% scholarship given or 50% scholarship given. So if you cannot allocate it to the certain aspect of the income, then I think it should shown separately as the expense part. But if such allocation is there, for example, the management defines a policy that the tuition fee will be waived off for a particular student, but the student is required to pay the transportation fee or the annual fee, etc., then you can show it as a reduction from there, with obviously a list of students for which this waiving off has been done.
Last question from my side. What is the implication and accounting treatment if the caution money collected from a student is not returned, even if the student has left the college? What is the implication accounting treatment if security deposit collected from employee is not returned to employee after retirement?
Okay, so there are two parts to this question. I'll take up the first part. I think I've spoken enough on the caution money, and I had covered this aspect, the circumstances where the caution money is converted from liability to an income. So, if there is a particular statute, now this is like I'm from Delhi, so I know there's Directorate of Education, and then there is Delhi School of Board Education, which basically makes these rules regarding the recovery of the caution money or the return of the caution money. Now, depending from the board or the statute which governs the particular, if there is a definition of the time period up to which the school can hold on to the caution money in spite of making repeated efforts to reach out to the students or the parents, and then after a lapse of certain time, say 3 years, 5 years, now that needs to be like defined somewhere. It could be defined at the management level, it could be defined at the statute level. So after that, you can reverse that liability to the income, because you know that amount will not be ultimately paid out to the student because the student is not collecting it. So that is the first part of the question. Coming to the second part, first of all, we need to understand why are we taking security deposit from the employees, because I'm not aware of any this practical consequence. There can be an instance where you have taken the advance, when you've given advance to the employee, that recovery process I'm aware of, seen it practically also. But if there's security deposit, so first of all, again, understand the policy or the logic behind collecting security deposit from the employee. So whatever rules have been defined either by the statute or by the management, accordingly, that will be converted into accounting language.
One more question, we just got it. Whether
Yes.
the statement as per the guidance note for non-corporate entities applicable to education institutions, and what is the effective date of applicability for which financial year?
Okay, so I think before this the format of financial statement from NPOs for non-profit organizations came in, we had a guidance note exclusively for accounting of schools, which was issued way back in 2005. So that has already been there in principle since then. This has been additional effort from the institute to define formats for basically non-corporate entities, including NPO as well. So I think both of these can go hand in hand, and there is no effective date as such. I mean, this is like good to have practice so that all the NPOs and all the schools they have common formats of reporting the financial statements.
Okay.
Hmm.
That's all from our side. Thank you, Astha, for wonderful session. I would like to thank you on behalf of all of our participants for giving insights on key consideration in audit of educational sector. And I will request Anilji to give you a vote of thanks.
I hope, thank you so much, sir. I hope Meenal madam is having one more question. Meenal madam, you are having one more question?
You
I
are
have-
You're on mute. Yes, ma'am.
Yes.
Yeah. Last question is there. Whether a school can provide depreciation on a school benches donated by the Rotary Club to the school?
Yes, so very much school benches are covered under the furniture and fixture definition of the fixed assets. If it has been donated by any, like Rotary has donated them, like I think Ashok sir also has a similar question. So you need to mention the notes to account that these particular benches were donated by so and so, just for better financial reporting purpose. So it's a very much a capital asset.
Now, Anilji, over to you.
Thank you so much, ma'am. Thank you so much, ma'am, for such a wonderful deliberation. You have covered almost all the aspects relating to this education sector. In spite of having at last some glitches, again, you have covered all the aspects. So thank you so much on behalf of Auditing and Assurance Standard Board of ICI for sparing your valuable time and shared with all of us with the various insights into this topic that is a very important topic, key consideration in audit of education sector. I also thanks both the moderators, today's moderator, Madam Meenal Khemka ji and Ashok Jigyasi ji for sparing their valuable time. And continuously, they were here with us for continuously 2 hours, as well as moderating of this today's webinar. Thank you so much, Meenal Madam. Thank you so much, Ashok sir, for to moderate this webinar. And once again, thank you so much, Astha ma'am, for sparing your expertise with all our members. I also thanks all the participants of today's webinar who have attended today's webinar. Thank you. Thank you so much.
Thank you. Thank you to all.
Thank you.
Thank you, Asta ma'am.
Thank you, ma'am.